Welcome to the Private Lender Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey everyone, thanks for checking out the show. Today we are discussing the process of presenting to capital investors, closing them, and then also some ongoing investor relations type stuff. So let's jump right in. Okay, so hopefully your investor leads are coming by referral. This is always the best way. Cold outreach for this kind of stuff I've found is not very effective and probably not a good use of your time. And look at the people that you know and see who might know, and you can even spreadsheet this stuff like I used to do. See who might have good connections with people who have investable capital and try to get an intro. Try to get an email intro, something like that from the person you know, and start there, right? And it's a numbers game too. Some people will respond, some people won't. That's fine. It's just part of it. And then to start out, I would, once you're introduced to someone, usually by email, I would send them an email with a pitch deck attached, but also be aware that a lot of people aren't going to read your pitch deck. So in addition to that being attached, and hopefully it's a short one, maybe, no more than 15 pages, call it 5 to 15, that sort of thing, to get your point across of the kind of lending you do, your track record, your business, a bit about the principles, basic stuff, right? Not a ton of words, not super long and detailed and hard to read, because, successful people who have investable capital, they're busy, right? They're likely not going to sit around and read that for a couple hours. So it doesn't need to be that long. In addition, I like to put a few bullet points in the body of the email with the assumption that they might not even look at the attachment, right? So put in, average loan amount, the area where you lend, rate of return, average credit score, like anything that you can put in like 5 bullet points in the body of the email to give someone an easy snapshot of what the investment looks like, right?
Yeah, think about if you were getting pitched capital, or if you were looking to get into any type of investment to begin with, or anything you're looking to purchase. You don't need to, have the information just thrown up on you all over the place, right? Like keep it very simple, very even broad, right? So, this is how we operate. This is how long we've been in business for. These are the types of returns. These are what the types of the deals look like. Keep it very, very simple. You can get into details at a later date, but keep it kind of simple. Now, one thing that will hopefully give you a little bit of a confidence booster that we found out in early stages is like, what's one thing? Think about one thing that all rich people want, and a lot of them don't have full access to. And it's getting high, good, safe returns on their investments. Everyone who has money, right? They're successful. That's the reason that, they have money, because they're successful, right? And they get it, and they understand business. Typically, they understand this type of investment to begin with, and they're lacking opportunities. It's the hardest part of having a lot of capital, including Warren Buffett. Is the reason he's got cash sitting around all the time is he's lacking good opportunities. He'll put as much cash as he can into any good opportunity that he has. And when we started out, we thought that we would have access to, lots and lots of really good deals, but we didn't have any capital. And, although obviously from day one, it's just going to be a grind, right? It's not easy to find lots of deals. It's not easy to find lots of capital. That being said, most investor meetings that we had early on, all of them were like, yeah, this model sounds great. Bring me some opportunities, bring me some deals, and then we'll chat. And I think that's kind of a confidence booster for anybody, that might be struggling or doesn't really know where to start.
Yeah, and it's all predicated on having good deals, right? You're like with weak deals and savvy investors, you're not going to raise any money. So anyway, moving on down the line. So say you get a response, some interest from the investor that you're reaching out to, then the next step is to do either a call or a lunch typically. Sometimes you won't be able to get a lunch, especially with busy people. Oftentimes you will, right? I mean, they have to eat too, and you can go to them, make it convenient for them. Lunch is better, but a call is good too. And also these days you have the option of Zoom so that you can have a call, but you can actually see each other, obviously. And we didn't have this option back in, pre 2010 and all of that when we were actively raising. So during that call or meeting, you don't necessarily have to go through like physically the pitch deck that you've already emailed to them, but you can walk through the stuff, your normal presentation process of like, here's what we do, here's why it makes sense, here's some sample deals, here's what happens when a deal goes sideways. And savvy investors will ask all the right questions, right? And so you'll be prepared for that because you're an active lender, or maybe you're a newer lender, but you have some good opportunities. And then an important part of the process is that you don't pitch them on a live deal in that first meeting. Very important. If you do, it'll make it look like you need it. It'll make it look like you're short on capital. It'll make them a little bit nervous. So you don't. You let them know that your loans are fully funded. And this is going to be true either because you don't have enough opportunities yet, or whatever the reason may be. That's typically the case, is that the loans in the pipeline are already funded and you're setting this up for future loans. And let them know that in the next maybe 30 or 60 days, I would try and hit that time frame that you'll have a live deal for them. And it's important to be around this time frame for both reasons. Like, one, you don't want to look desperate, like you need to close the loan next week. And also at the same time, you don't want to let it go too long because they might just lose interest. It'll fall off their radar, that sort of thing. And during this time, you put them into your, maybe they're already in there. And if they're not, you put them into your investor list, your email list and your database. And you're pinging them weekly with things that are going to the whole list, with things that are going on at your company. A loan closed, a loan paid off, here's a before and after on a deal. Whatever it is that's happening at your lending company, you're going to be dripping on them weekly so that you stay front of mind, so that they see that you're closing deals, other capital investors are funding them, and things are going well. That's important to drip on them throughout this like 1 to 2 month process.
Yeah, and take our word for it that this process works. Like, Chris developed this process on behalf of Hard Money Bankers early on at a necessity, right? Like we had deals that were coming into the pipeline, and the capital's drying up. It's all funded, right? Not enough deals were paying off, coming full cycle, so we needed new capital in the mix, but we had to do it strategically. We've tried at lots of things. We've been in this business since 2007, and there was no training manuals, there was no mentors, there was no gurus, there was no education on these processes that were out, which is one of the reasons why we started this podcast and we started the Hard Money Mastermind, was to try to educate and teach some of these to other lenders all throughout the country. So I can tell you with certainty that it works if you're raising capital to co-lend in your deals. It also works if you're raising capital for syndications and things like that. This exact same process worked for one of Chris and myself's best friends, who he does a lot of deals, multifamily, commercial, self-storage, and things like that. And he needed to raise capital. We're like, hey, let's chat. Follow this script. I promise you, this works. So just keep that in mind. Like, do it the right way, and it will work.
Yeah, totally. I mean, and several inner circle members now are going through this active raise process now, using the exact thing that I'm describing here. So it is effective, and also realize that it's a daily job. I wouldn't say it's a full-time job. You might not spend all day long, all week long on raising capital. I'm sure you have other things to do in your lending business, but it is a daily job of reaching out to people, following up, presenting, doing your investor email marketing. Also, back it up for a second. During that meeting, your first meeting, whether it's on the phone or in person, another thing that you want to do is try to gauge what you have in common with this investor. What are they into, right? Are they big sports fans? Are they golfers? Do they like going out on their boat? Are they big into, wine and dine and going out on the town a bit? Like, see what you might have in common with them, because this is going to come into play later on when we're talking about ongoing investor relations, which we'll finish up with. So next step in the process, fast forward, it's 1 or 2 months later, you have a deal for them. It's a regular looking deal, run of the mill. It's not necessarily like a 20 LTV home run. And it's also not a shitty deal. That's important. It's a regular deal, because you want to get them accustomed to your bread and butter. And you send it over to them. You let them know that, okay, I have a deal for you. It's 250,000, 400 ARV, all this normal stuff, DC suburbs, normal bread and butter deal. And what happens next is important, because oftentimes people will try to pass on the first deal for a couple different reasons. Sometimes they just feel they're being prudent if they do so, pass on the first deal on being savvy kind of thing. Sometimes it's because they want to take control of the situation. They want to take frame control. They want to be like, oh yeah, maybe you're going to have to, pay a higher interest rate or like pay me a point. Like sometimes some investors do that too. Some of them are sharks. That's how they became successful. It's just part of the game, right? And the response is, look, this is a very bread and butter deal. Like this is what the majority of our deals look like. If you feel that this kind of investment isn't right for you, then that's fine. Maybe this kind of private lending isn't the right investment vehicle for you, and that's fine. And typically they'll relent and be like, all right, let's go ahead with it, sort of thing. And if they really pull out, if they pass on your bread and butter deal, then that's probably the end of it. You can keep them in your database. You can continue to market to them. You can even proactively reach out to them with another deal. But yeah, anyway, I mean, those conversations do come up at this point in the process. And assuming most of them will say yes, because you followed the steps that I'm talking about. And then you get your investor agreement signed, get them the wire instructions, let them know when this is closing, make sure they wire it to you the day before so that you can control the timing of your funding wire. All good. Do your post-closing process, get them paid out the interest paid at closing, and keep it moving along. Send them a copy of the closing docs, all the normal stuff that's in the process, right? And they stay on your list to be marketed to. They're now in your system to get monthly statements, payments, all the normal stuff. And we found that process right there is effective. You definitely want to be careful that the first deal they do doesn't default. And it shouldn't. If it's a normal bread and butter deal, maybe even repeat client, it probably won't default. If it does default, they might not get back in again. Now, if they get in a default deal 10 or a dozen deals down the road, that won't throw them off too much. If their number one deal defaults, even if it's a clean exit later on, you run a big risk of losing that investor. So something to be aware of. And then start moving forward with the relationship. Like you don't need to give them a second deal right away. Maybe once the first one, usually it's a good rule of thumb, give them a second deal once the first one pays off, and then they'll go in heavier. If they come in $250K on the first deal, that pays off, you can give them another one. And while that one's outstanding, they might want to put more in. Like this is going well. I'm getting paid, 9-10%, whatever it may be. And they seem to have a good operation. Let's go in a little bit more. And then you keep going down the road and they have some more deals pay off. They might suggest that they want to put more money in, or you can ask them like, hey, I have some more deals. Like if you want some more, totally fine at that point in the relationship to do so. And a few more deals into the road, you can start asking for referrals. Hey, if you know anyone else that you think would be a good fit, like we're careful about, who we take on as investors, but if you know someone who, understands the game, you think it'd be good to work with, I'd be happy to talk to them, take on some of their capital as well. We don't take capital from just anybody. We underwrite investors just like we do borrowers, like who you want to work with.
Yeah, good point. And the process is slow, but the process is fast at the same time, right? Like you look back in a year and you're like, oh, wow, I did this in real time. If you need the capital desperately, it's going to take a few months to get them on board. That's why, like Chris said, should always be on capital raising mode. If you're growing, every day, steps to raise capital, steps to get new deals, new capital, new deals, new capital, new deals. And then, after you've been in business long enough, it snowballs very, very quickly, right? Because capital investors, put in more capital. They refer their friends. Their capital tremendously grows, right? Rule of 72. If they're getting 10% return every 7 years, they're doubling, right? So that's a thing as well. Before we end, I want to tell you one quick story that actually happened yesterday. So we actually don't really ever take on new capital because we don't need it. The capital has grown substantially over the years. But one of our capital investors that we co-lend with reached out to us about a gentleman and a client of friends of his that had quite a bit of money and was a big businessman locally. And he said, hey, I know you guys don't really take on any new capital investors, but would you consider talking to him? And we said, sure. Anyone who's a successful business person, be happy to chat with. And just for a little bit of a frame of reference, he came in the office, we chatted 30 minutes, right? He was already referred, right? So he was already kind of sold on the, pre-sold because he came as a referral, which is obviously great. We chatted for 30 minutes, a little bit about ourselves and a little bit about how these opportunities come. He had some really quick questions. Most successful people, have the D of the DISC personality assessment, right? So they're dominant, they know, they're smart, they're bright, they understand the model. They just asked some specific questions. Then went out to lunch with him for about an hour or so. So we spent 2 hours with him, and all said and done, he's like, and during that process, he kept leaking of, hey, I want to start doing this type of thing. And, Chris kind of, slowly whispered in his ear, hey, like, that's great. Like, would love to work with you. Unfortunately, we just don't have any, opportunities at this point. But that being said, in the future, as we continue to grow, maybe we can get some money in Q1 or Q2 of next year deployed for you. So, he's asking to deploy. We're kind of throwing it off taking it off the table a little bit, which is true. We don't have any opportunities for him at this point. And potentially to take on his capital, we might have to, ratchet down another capital investor to do so. That being said, like, that closing rate it's 100% closing rate. And as you get good at this and you're qualifying, like Chris said, you're qualifying these capital investors, like, the closing rate should be high, if not 100% on some of these, right? Because they've, if they're coming to you, you're vetting them, you're going through the process, the qualification process, to make sure they're a good fit. Like, they already know kind of what approximate rate of returns are and things like that, and the structure. It's not that hard of a sale.
Yeah. And then ongoing investor relations, like I started to mention before, like, see what you have in common and where you fit in terms of a relationship with the investor, like what they like to do, what you like to do, and where you overlap. With most of them, you will. With some people, maybe you don't have a whole lot in common. They seem to be more of a passive investor, and like, might not have like ongoing, hangouts. They're like going out or playing golf. With some people you won't. With a lot of people you will. And there's different ways that you connect with people. Like, later on this month, I'm going to the 90th birthday party for one of our oldest in terms of age, also oldest in terms of how long he's been investing with us, to his birthday party. Right. And so you just see like where you can show face, show your appreciation, just continue building that relationships, and they turn into very, very good relationships. Successful people with capital are great people to know. The guy that we had lunch with yesterday, like Jason was saying, he is an influential business person in this area. We are happy to be in business with him. We will work him in. So I hope that helps you in your process of raising capital, wherever you might be in that process. Try to add some of the stuff that we covered here today. Also, if you haven't done so already, check us out at hardmoneymastermind.com. It's our free community of private and hard money lenders. Create a free account, join the conversation, and we'll see you next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not intended for legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you would spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money lenders.